Hello, Trade Pros. So today we're going to be continuing our Forex mini series. I'd like to welcome YouTube and everyone into this little mini series. This is part two. We're going to be covering the USD Japanese yen. It's your host Victorio from TRADEPRO Academy, and let's just get started. Alright, so in today's mini-series, we're going to dive into more of the USD Japanese yen, and we're going to go over some trading rules for the USD Japanese yen in Metatrader at the end of this lesson. So stay tuned, guys. Let's dive into this. So the Japanese yen, as we know from previous videos, is a safe haven asset. So investors love to flood into the yen when fear increases. That means usually when equities drop off, we see an increase in a bid in the yen. It's considered a less risky asset, but careful when it comes to the BOJ because we're going to talk about that soon. So the Japanese yen can be driven by oil prices. Like we did talk about, cheap oil means a bid in the yen. It's good for the yen because Japan is a huge importer of oil. Traders should keep a strong eye on the yen to see if there are any sharp rallies because this usually does not mean good news for the equities. Right here we have a little chart on the screen. The solid graph here is the yen and the faded graph in the background is the S&P 500. So right here, guys, you can see a sharp rally in the yen usually sells off in the US equity market. Huge sell-off here from a sharp rally in the yen. So continuing forward, let's talk about the Bank of Japan and the yen. Being a safe haven asset through the supply and demand rules means that investors flooding money into the Japanese safe haven asset, aka the yen, when things look rough elsewhere. When fear rises means that this yen will increase in value. Having said that, since the Japanese economy is reliant on exports or a boost in exports, they want a cheap yen because this will drive exports up. So this is where it gets a little complicated, everyone. This means that there's chronic intervention by the Bank of Japan, the BOJ, the BOJ, and this presses the yen lower. So an interesting little tidbit for you guys is when the BOJ speaks, you have to watch the yen super carefully. Anything can happen, making the USD Japanese not the best pair to trade because the BOJ usually intervenes and they could say honestly anything. But this usually happens at the 110 level. So the $110 level on the USD JPY, this is outlined by this line right here. Around this level, you could typically see intervention, so it usually acts as support and resistance. So watch that level very carefully. Another little trick is if you guys don't really feel safe trading the BOJ reports, the USD Japanese yen, using the BOJ reports, we have another little trick, and that is trading the yen futures. They go as JPY USD, so that's why they might seem like a very small decimal number, but trading these during these events on the futures market has more liquidity pumped into it than if you would the spot. So keep an eye out on that. And sometimes in our trading room, we do trade the BOJ reports. Wrapping this little quick video up for you guys, let's jump into MetaTrader and see how we could swing the USD CAD. Right here is our little MetaTrader terminal. As you can see, we have the USD JPY in a daily 1 hour and 30-minute time frame. So we're going to do some quick analysis here and maybe look for a trade with you guys. Right now on the daily, we can see a little contraction of the Bollinger Bands. We're holding really strong support at these 20 and 50-day moving averages. You can see MACD is slightly bearish beneath the 0-point mark, but we're making a rally to try and surpass this mark. If this mark fails and we see a push lower, followed by an expansion of the bullies and a drop under the moving averages, while MACD continues to drop to the downside, we could look for a retrace back into the moving averages for a shot lower. We're trading at the 111,435 level. Remember, the 110 is a nice support area, so that could be a potential target for you guys. Going into the 1 hour from the daily, we can see it's holding as strong support right at these moving averages and middle of the bully. Huge wick candle here. this is a little head fake higher, but guys, if we fail to break this high again on a red candle, such as a little doji, maybe something like that, we could look for a push lower. But if this candle does break to the upside and we see some convincing rotations down here with a push higher, we want to see the MACD cross above the zero point 0.0 level, we can look for a buying opportunity. Again, guys, on the daily, the trend is very strong to the bullish side. We could almost draw a channel right here and look to secure a long position. Jumping into the 30-minute, we see something similar to the 1 hour. All these three time frames come into play. That means this trade, if the US dollar continues to push higher, will be a great long opportunity. This was just a little quick analysis for you guys, what to watch out for. Remember, watch that US dollar index for a more overall Forex market sentiment. So guys, this was Victor from TRADEPRO Academy with a short little USD JPY video for you guys. And like in the slides, we are going to cover the USD CAD next up.